Hello, traders. Gary Wagner here. It is 12:52 in Honolulu, 5:52 in New York on Monday, 14th day of February 2022, and this is the Daily Report for Gold and Silver. Today we are seeing a continuation of the massive gains in the price of gold that occurred last week. Obviously, no diplomatic solution was reached over the weekend, and gold gained $31 basis the most active April contract. That is a 1.68% increase, with futures currently trading at $1,873.10 after trading to a high of $1,876.50 and a low of $1,851.90. Unquestionably, the geopolitical tensions between Russia and the Ukraine have created a safe haven play, with the dollar as well as gold trading higher on the day. The dollar index is currently at 96.27, a net gain of about 0.2%. Silver had extremely respectable gains today, gaining 2.12% or 50 cents on the day as it quickly approaches $24 an ounce. Currently, the March contract is fixed at $23.86.5. However, it was the precious metal that is primarily mined in Russia, with Russia producing 40% of the annual production, having the greatest percentage gain. Palladium gained $167.90. That is a 7.65% gain, 7.81 as you can see. We are trading actively now. An ounce of palladium vis-a-vis the March contract is currently fixed at $2,365 per ounce. If you recall from Friday's weekend review, when we recorded the show, it was after the close in New York, and gold was trading at roughly $1,860. As you can see, once they adjusted for the close in New York, that was below the breakout line. However, we had follow-through buying, and we had a surge in pricing today, taking it above the current resistance that we are pegging at approximately 1840 to 1850. We spoke about the fact that it certainly took out the former high of $1,851, and should gold continue to trade higher, which is highly probable unless there is a resolution to the current conflict in Russia and the Ukraine, we are now looking at $1,880 as the most plausible place for gold to track higher. If it continues on a tear, we need to go back to the top prior to that, and that comes in at approximately $1,920. As we spoke about on Friday's show, on today's show, I want to begin looking at various models to project where this rally could in fact go to and where it could conclude. Simply put, I am using a Fibonacci extension, and I am using the rally which began at 1753 and concluded at 1853. So it's a $100 rally, and then I begin that from the lowest price, which is this point here, at approximately $1,779. The rule of Elliott Wave is that Elliott Wave says that the third wave cannot be the shortest of any of the impulse waves, which in effect means that it could be equal. In other words, wave 1 and wave 3 could be equal, but wave 3 cannot be shorter. So the minimum that we would expect to see gold continue according to this model is approximately 1880. That is a 1-to-1 relationship. However, we then ascertain what happens if it goes to a 1.23% extension, a 1.382% extension, and a 1.618% extension, the most common being a 1.618 extension. If it goes that high, we are looking at the real possibility of gold achieving a high before the conclusion of this rally and the subsequent correction that would follow of approximately $1,940. A 1.382 takes us to 1917, which is logical because realize that the last top came in right around 1920, which is why I would think that this would be a price point that would be most likely to occur. The 1.236 comes in at 1902, and we know that that is a key psychological level, and we could easily see gold trade to there and back off. We will continue to explore different models throughout the week. We will look at where our current stop is and effectively look to move that later on this week. So, where would we look to move our stop up to? And our thought process is as follows. We have been following this resistance line, which, as I've just said, should become a level of support in that it's based on a series of tops here. It's also a descending resistance line, so price continues to get lower throughout time. We would probably look to move that up just above $1,840. Once we have a little bit more room here, we want to see how it reacts if, in fact, it trades as high as 1880. And in that case, we would certainly want to move it just below $1,851. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.